Hello there, traders. For today's analysis, I decided to cover the euro dollar, and I will speak also about the pound dollar because I think there is some interesting, interesting price action that happened after the CPI. So we did have actually just 15 minutes ago, the CPI came positive, actually quite big deviation from the forecast. That actually the forecast was 0.2%. And we got an actual 0.8% CPI month on month and 0.9 core CPI month on month versus 0.3 forecast. It's a pretty good event for the dollar, an instant reaction on the market. So I can show you that. So for example, in the euro dollar, we got a sell off of about 50 pips, instantly, like in a few minutes. But the point is, if we check the longer frames, for example, like check the daily time frame, we can see basically that price actually broke this mini 2-day consolidation. So it seems like a breakout mode based on this 2-day balance. We got a breakdown here. So I will suggest basically to still watch for a down opportunities on the upside, the rallies. Like this is a pretty good reaction so far. After this drop, we got a reaction from buyers. And I will also show you, I will use the InstaForex platform, the MT4 platform, and I will use the market profile chart to show you also one very interesting thing here. And that is basically that we got pretty well-defined upper ledges here, and we got a breakdown of the ledges, and we tested this middle area. We almost tested this lower ledge, but we didn't quite test. We missed about 10 pips to test. Anyway, I think that we can trade into this area in the next period and eventually try to attack 1.2060 or even 1.2020. So there can be actually a pretty good gap to trade on the downside to eventually watch the sell on the rallies, around the previous day low, and then think about that target at 1.2060 and 1.2020. The stop can actually be placed. You can define stop, for example, above of all of today's activity. You can place even stop if you want for a swing play above this distribution high. That's a quite big stop in that sense, so because it's literally a 40 pips stop, but for return you can go for 80 to 120 pips, which is a still 2:1 to 3:1 ratio. So you can define different stop loss levels. One can be here and one can be above all of this activity from the current wick if you want to play for a swing trade. And the pound dollar is basically pretty similar to the euro. So we got a big spike down and rejection upside, but it seems like that pound dollar got a very well-defined upper ledge, and seems like basically that we got upside movement, something like we call in the market profile the P shape, which is basically telling me that we have lots of the big area that we didn't have so much activity back and forth, which can lead us basically to the drop probably towards a 1.4030 or even lower. So even to test the current week low at 1.3985. So I'll also suggest you watch for a sell on the rallies. We got right now one rally there on the pound, so it can be actually quite interesting opportunity there, and you can even place a stop above all of this activity, and then see, place a stop about 35-40 pips, see if we can go basically 100 to 120 pips, even more. There is even space for a 200 pip drop. Now, so my suggestion is try to sell the rallies in the British pound versus US dollar and the euro dollar versus euro versus US dollar also for the short opportunities.